Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at how you should be taking profit on your Bitcoin positions. To do this, we'll be using a number of resources that are all freely available on lookingtobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Pi cycle top indicator, one of the indicators that was actually made by our founder, Philip Swift, and to be honest, there's not many better top timing indicators out there. This is truly one of the best for timing the market tops, which is just a standard 350-day moving average of Bitcoin multiplied by 2 and the moving average of the 111 days of Bitcoin's price action. And once they cross, it gives us this Pi cycle top crossing that has historically provided a Bitcoin topping signal within just a few days of Bitcoin's price action topping out. So obviously this is a truly fantastic signal, an indicator you can use for trying to call the market tops on Bitcoin. But ultimately we need to be aware that this probably isn't going to always work as it has done historically. And I think a better way of taking profit, rather than just lump sum profit taking once we get one flash signal from any sort of indicator or market cycle chart, rather than doing that, we should really look at scaling out of our Bitcoin positions. It's always the advice of long-term Bitcoin traders and investors to, rather than just lump sum buy at a Bitcoin price bottom, which is almost impossible to try and time and call with any type of precision, rather than doing that, you should actually scale into your positions. So it's not really a common theme to people discuss scaling out of their positions. A lot of people try and take profit at the absolute top of Bitcoin's price, but rather than doing so and potentially missing the top or mistiming and feel left out that Bitcoin rallies to higher prices, we should actually consider scaling out of positions with a truer and more accurate on-chain plan than just wild speculation and hoping for the best. So while the Pi cycle top indicator is definitely something you should keep a close eye on in the next bull cycle, we should maybe look at some other on-chain metrics to get a decent strategy for profit taking. So if we just go to the MVRVZ score, this is obviously one of our favorite indicators here on lookingtobitcoin.com, which is using the market cap, which is just the standard Bitcoin price multiplied by the circulating supply, and the realized cap, which is the average transactional value of every Bitcoin on the network. So the last price every Bitcoin was sent out previously. If we just aggregate all of that up, we get the realized cap. And this tells us the average transactional value of every Bitcoin on the network. So once we actually subtract that from the market cap and just divide by the standard deviation of volatility, we get this MVRVZ score, which gives us great historic buy and sell signals for Bitcoin's price. And we can see in every single one of Bitcoin's bull cycles, we actually did get a sell signal when the MVRVZ score came into this red sell zone here. However, it did only just tap into this sell zone in the previous cycle. And one thing we can actually observe is it's actually trending to the downside, these MVRVZ score peaks. So rather than potentially waiting for us to definitely hit this red zone and take a lump sum profit right there, we should maybe consider scaling out as things start to get overheated in the market. So what's a good way we could consider doing this with Bitcoin's rather volatile price action? So if we just isolate over the previous two bull cycles, we can maybe try and get a better picture of how Bitcoin's price reacts as it potentially gets a little bit overbought and into the region where you should maybe consider profit taking. So rather than just having a fixed idea of selling once Bitcoin's price action goes into this red zone here, because we also have to be open to the possibility that in the future Bitcoin bull cycles, the MVRVZ score doesn't necessarily reach scores this high, we need to consider potentially taking profit, or at least having a plan of considering profit taking once we maybe get above scores of 5 or even 6 on the MVRVZ score. So if we just take a value of 6, for example, we can see in the 2017 bull cycle, we surpassed a Z score of 6 on November 28th, 2017. So if we just go onto TradingView here, we can see just on the Bitcoin daily chart, if we scale back to the 2017 cycle here on November 28th, we can see Bitcoin's price was sitting at around just beneath $10,000. But as we topped out at near $20,000, this obviously wasn't the ideal time to be taking profit on your positions. So one very simple way you could do this is actually wait. So once we actually get this signal on Bitcoin that we've actually surpassed an MVRVZ score of 6, is to mark on the chart the current open or the lowest open or close on the price. So on the 28th of November, it was about $9,700. And every day on Bitcoin, wait until we actually close beneath that price. So once we actually close at a higher price, so we didn't close at a higher price until here, we'd actually move up this sell line just slightly to match our new candle here. And again, Bitcoin's price continued rallying to the upside as we got into a very overheated market. So we'd actually set that to here. We had some downwards days, but we're not actually selling until we close beneath this line. And then we, of course, continue rallying higher to make even higher highs. And then here we'd sell at around $16,500. So you don't have to sell, of course, all in one lump sum. You could wait until we actually get this signal and then sell maybe 10% of your Bitcoin position every day for the next 10 days. And then in doing so, you'd have actually covered yourself, sold some at the exact price peak of Bitcoin, and you'd have actually got an average exit value of above about $17,000. So very good profit taking on your Bitcoin position. And the same can be true for the just most recent bull cycle we've had. So again, if I just zoom out, clear the chart, and we go back to the MVRVZ score here, we can see we surpassed a value of 6 multiple times actually in this most recent bull cycle, as we almost had 3 different price peaks in Bitcoin, once at about $40,000, again just above 60, and once more around $70,000. So we can actually see once we pass these for the first time, if we just zoom out again onto the Bitcoin price chart, we first surpassed this value on January the 6th. So if we go back onto the chart here, we can see on January the 6th, which was up here, we can see we didn't actually get a close until around here. So you'd have taken profit on a little bit of your Bitcoin position at around $38,000. But then obviously Bitcoin did rally higher. So as we passed again on February the 12th on the MVRVZ score, we could follow that along here, find February the 12th, which was this candle here. But we'll take the previous high setting candle and the low of that. So once we actually set highs, continue going up, we'd have actually sold here at around $54,000. And once more, as we surpassed again on March 17th, we can just follow that along, and again we'd be profit taking around here on March the 21st at around $57,000. So definitely not a bad strategy to implement, waiting until we get these high MVRVZ scores and waiting until price actually reverses a little bit rather than just instantly taking profit. And then again, especially if you can time by selling set percentages of your Bitcoin position as we get these exceptionally high MVRVZ scores, this definitely isn't a bad strategy to consider implementing. But what if we actually dive a little deeper than this? So again, if we were waiting until we had exceptionally high MVRVZ scores, but rather than waiting for price reversals, which is obviously going to cost us a few percent as Bitcoin turns to the downside, if we actually look at something like the advanced NVT signal or the active address sentiment indicator and use a bit more of an on-chain metric to try and lock in profits at the most optimal price. So we actually did a video on this not so long ago regarding a profitable on-chain Bitcoin trading strategy. And we're going to use some of the logic we discussed in this video here, which I definitely recommend watching if you haven't already. And we're going to tweak that to try and adjust and use this strategy as a more optimal profit taking strategy. So again, if we look at the MVRVZ score, and we can see once we get into a very overheated market, once we see these scores very much dipping into the sell area or even just scores above 5 or 6, we can look at these shorter term, more frequent on-chain signals that we get. And if we just isolate this over the previous 2 cycles here, we can see once Bitcoin actually starts peaking out and we cross beneath either of these standard deviation bands on the advanced MVT signals here. So for example, we'd have crossed beneath on about December 12th at around $17,000. And once more exactly on December 17th, as Bitcoin's price exactly topped out around $19,000. If you were to implement something like this, wait until we had one of these signals crossing around its standard deviation bands, and just taking small percentages of profit every time it does so. So again, on this active address sentiment indicator, you could have taken 10% at around 32,000, which wouldn't have been ideal. But again, we come back up, we cross back beneath at around 52,000, once more at 58,000, again at 50,000. But then once more, as Bitcoin rebounds up from around 30,000 to near $70,000, you'd be locking in profits at $49,000, 46, 47, 61,000, $57,000. So once we actually get confluence from multiple different on-chain and market cycle metrics, it can really give us an accurate indication of when we should be taking profit on our Bitcoin positions. So just to summarize, using a number of on-chain and market cycle metrics, we can plan in advance where and when we should consider scaling out of our positions. We also need to take into consideration that timing the market tops is an incredibly difficult task, as is timing market bottoms for Bitcoin investing. To increase our chances of success, rather than just taking lump sum investments in or out of positions, we should try and scale in and out of our long-term investments. We also need to take into account that having a rigid and fixed mindset can be very costly. I know in the previous bull cycle, a lot of people were waiting out for $100,000 Bitcoin before taking any profits, but realistically, we need to take into account what the data is presenting to us. We need to ensure we have a reactive and unbiased mindset and unemotional when it comes to our Bitcoin investments. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, what is your plan for profit taking in the next Bitcoin bull cycle? I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.